Welcome to Upticks with Jake Falcon, founder and CEO of Falcon Wealth Advisors. In this podcast, we help high net worth individuals overcome financial complexities. We do this by enhancing financial literacy and discussing topics in a language free from industry jargon. Join us as we help explain exactly what having a solid financial plan means, as Jake draws from years of experience in helping hundreds of individuals get financially organized and focused on their goals. We hope you find Upticks educational, entertaining, and shareable. Now, on to the show.
Welcome back to the show. This is episode 214, Understanding Social Security. Jake, thank you for joining me back on another episode of Upticks. How have you been?
Good. Thank you, Jake, for having me. I appreciate it.
Anything, before we dive into today's topic, is there anything new going on in your life? You've got any travel plans or anything new at the house?
Nothing too new. I did redo my basement probably about a month ago, so it's nice having that redone. No travel plans set up yet, so maybe I'll get some on the books.
So you did the bathroom and then you did the basement?
No, I just did the bathroom. The basement is something I've talked about doing. You know, the drop ceiling in a lot of the older homes basement, I want to take that out and then maybe spray paint it, that industrial look. So we'll see. We'll see if I get to it or not.
Oh, so you haven't. So that's what's on the agenda next.
Yep.
Got it. Well, good luck with that.
Thank you.
So same with me. Not much is going on. I've got some golf trips planned here, a couple tournaments coming up as we're swinging into fall. It's a fun time of year to play golf because the temperatures aren't as hot. I don't like daylight savings. So typically, it doesn't happen in October. I think it does happen this month.
Yeah, I think so.
So, or coming up month. With this time this podcast, our compliance gets this all approved, it'll be probably close to October. But I like playing golf in the fall, but when the daylight savings hit, the sun never gets, as high as it does in the summer. So it always feels like it's about to be dark, and I don't like that. But I do like the cooler temperatures. It's not so hot out there. But for today's topic, again, understanding Social Security, you and I wanted to go into maybe some fun facts with Social Security, explain some strategies that people maybe overlook, and maybe discuss some things that people don't know about Social Security benefits. And like I said, before we go into it here, I want to thank everyone for tuning in. If you're watching this on YouTube, thank you very much. Please subscribe and like the show. That's the best way for people, for other people to see our content. And if you're listening to this on your favorite podcast platform, thank you so much for tuning in. A 5-star rating would be much appreciated. And again, subscribing is the best way you don't miss an episode. I'm not going to spam you. All the subscribe does is make sure that you get the episode. You get a little pop-up notification when these episodes go live. So again, I encourage everyone to do that that's tuning in. Okay, Jake, so let's go into some fun facts here about Social Security. So Social Security came into existence in 1935, or that's when FDR basically made the Social Security Act into law. The first monthly check wasn't payable until January of 1940. And Jake, can you guess how much that check was for?
I don't know the exact number, but my assumption is that it is probably somewhere around, is it a monthly check?
Yes, I believe so, at least.
Maybe around $40 to $50.
Yeah, half that, believe it or not. The first check was $22.54 in here. So it's crazy. That's 80 plus years ago. So now Social Security is typically around $1,000, $2,000, $3,000. So inflation has certainly helped with that. But certainly the system and the rules have evolved in the decades since. And today, Social Security is one of the largest government programs in the world, and it literally pays out hundreds of billions of dollars each year. So it's a big deal. I think I also looked up that there's 70 million Americans collecting Social Security currently. So it should be a hot topic, Jake. So no pressure. There might be millions of people watch this episode because it certainly impacts many, many, many Americans. But I want to go into some of the nuances today because, most working people understand that they are paying in to Social Security, and at some future point, hopefully, they're going to have a benefit paid back to them. But let's talk about some of the eligibility first, Jake, as we kind of go into understanding Social Security. So in order to qualify, let's talk about some of the minimum criteria in order to qualify. Do you want to roll some of those out for us?
Sure. Yeah, you have to be at least age 62. For one, that is the minimum age that you can actually start drawing Social Security. Your full retirement age can vary. For example, it could be 66, 66 and 4 months, 66 and 6 months, and so on. But the first age you can start drawing is 62.
Yep. And you also, and so to pay into that, now not just anyone can get it at 62, right? So you have to pay in for approximately 10 years or 40 quarters of your working career. So, if you worked in your teens and then maybe you were a stay-at-home mom and then you went back into the workforce, again, as long as throughout your working career, you've got 40 quarters where you've paid into Social Security, you will have an estimated benefit out there for yourself. Now, to make it nice and complicated, to calculate the benefit, they take an average of your 35 years, I believe is what it is, to
Yep.
figure out what your actual benefit is. But to hit the minimum criteria, you've got to have those 40 quarters. Now, the good news is if you're married and maybe you were a stay-at-home dad or a stay-at-home mom or just stayed at home, as long as your spouse qualifies, you may be eligible to qualify for a portion of theirs. So again, there's a lot of nuances, but just broadly speaking, like you mentioned, 62, a lot of people think 60 is when you can turn it on, and some people even think 65. 60 really has no bearing on Social Security, and 65, where they get that confused, that's when you're eligible for Medicare, not Social Security. So 62 is when you're eligible. It will be a reduced amount than what you commented on your full retirement age. And in order to fully maximize Social Security or get the most benefit, you would have to wait until you're 70 to turn it on. So you literally have 8 years and all these months and times and full retirement and reduced and max benefit to figure out. So it's a very complicated thing, you would think, for your typical American that's not in financial services to figure out on their own. And that's one of the things that we do for our clients is we help figure out when's the best time for them to turn on Social Security, which we'll get into here in a moment. Is there anything else regarding the minimum criteria, Jake, for Social Security that I haven't touched on here?
Nope, I don't think so.
Yeah, and I think there's also one little quick thing I just thought of is that sometimes I believe you may be eligible to qualify for disability or there's other certain criteria, unique events going on that you may be eligible to turn it on earlier, even than 62, I believe, Jake.
Yep.
But for today's topic, we're talking, again, broadly speaking, if you don't have any unique circumstances, again, you got to pay in 40 quarters or approximately 10 years. They take an average of your 35-year career. Earliest is at 62. Everybody has their own full retirement age, and then the max is at 70. All right, good. So another big misconception that I want to talk about, Jake, is that a lot of people think that the working class right now think that by paying in to Social Security now from their paycheck, that is literally going into a pool for them to later access, when that's certainly not the case. Can you explain where their money is going today?
Yeah, their money is essentially going today to pay for folks that are actually drawing a benefit. So you pay into it, but those dollars, those tax dollars through your payroll deduction or payroll tax is actually going to fund current benefits that are getting sent out to your everyday American. So it's not.
Let me talk about that real quick, because this is a
Sure.
little soapbox of me, a little pet peeve I have against the government. And again, I'm not against the government, right? I don't want to get in trouble here, but my issue is that by definition, that is a Ponzi scheme. And Ponzi schemes are highly dangerous, highly illegal. And basically the definition of a Ponzi scheme is when you take new money to pay out original investors. And that's what's happening here is they're taking new money from our Social Security, from our wages, and they're paying out older people that are receiving benefits. And I don't understand how the government gets away doing this. I don't understand where all that money went in that people have paid. I mean, I guess if they started it in 1940, there was nothing to start with, so they had to start it that way. But you had to believe at some point there could have been or should have been a surplus. But maybe I'm wrong. I don't know. It feels a little sketchy to me. a little shady, but hey, I'm not the one making the rules here. But so people need to understand that, like, look, yes, you've paid into it for 20, 30, 40 years, but that money's long gone. That money has been paid out to now the 70 million Americans that are receiving benefits.
Right. And I wish that there was a little bit more transparency with how the funds are being managed and where they're going necessarily. So it's kind of a big mess, like you alluded to. It is essentially by definition a Ponzi scheme. So it's weird that they can get away with it, but I guess it's part of it. But another weird thing is that a lot of folk, not necessarily weird, but a lot of folks don't understand that they pay into Social Security via a tax, payroll tax, and they don't understand that when you go withdraw the benefit in the future, that a portion of it can be taxable. So it's a little bit confusing for some folks, but Social Security can be taxable.
Right.
So
Go ahead. And it's based on your income, right? So again, if you're in a lower income in retirement, your Social Security more than likely won't be taxed. If you're above the threshold, which I don't know if you have those handy, and if you don't, that's not really that's a little bit on the scope of today's show because they change. If you're above that threshold, then up to 85% of your Social Security may be taxed. And I know that really upsets people sometimes to hear that, but it's something you need to understand. And obviously we know that, and we build that into the financial plan. So we know what your income is going to be and if it's going to be taxed or not. And maybe we can manage your income to get it below that threshold. But it's something that people need to be aware of. You're right. And most of our clients, it is taxed because that threshold's pretty low. Do you know, Jacob, just a ballpark what it is?
Yeah, I believe for a married filing joint, the top one is 44,000. And it's defined by your provisional income, which is essentially your adjusted gross income, AGI, plus tax exempt interest, which could be like a municipal bond in your portfolio, plus 50% of your Social Security benefit. So they add those three figures together, and then that is what your provisional income is. And again, that number, if it exceeds, in the ballpark of 44,000 and you're filing married, then 85%, up to 85% of your benefit is taxable. Now you do get, in a way, some tax benefit because not all 100% of the benefit is taxable, but it's certainly really, really important for folks to understand that because as they get closer to retirement planning, they need to understand where they're going to draw income from and how that income is taxable so they can actually draw tax efficient income and lower taxes in the future.
Right. Very good, Jake. Yeah, it's a good point. And that's one of the things that we do at Falcon Wealth Advisors is that as part of a well thought out retirement plan is that we'll take a look at all of your assets, what types of accounts they're in, where your income streams are going to come from in retirement. And we'll actually analyze your taxes every year and then help you determine where's best to optimize, maximize your tax situation so that you're not paying more into Uncle Sam than you necessarily need to. But it's important to understand, again, that's the whole theme of today's show is understanding Social Security, as that more than likely it probably will be taxed, and that's okay as long as, again, we built all of that into the financial plan projections. Now, a lot of people ask, this is probably one of the most common questions we get is, when do I turn it on? Let's say I'm retiring at 60, and they ask me all the time, do I go ahead and turn it on at 62? Do I wait till my full retirement age, or do I wait till I'm 70? Jake, why don't you walk through some of the conversations we have when somebody asks us that question? Because it's a good question. It's a valid one.
It's a very valid question. And it's a little bit, in a way, hard to give you the perfect answer because Social Security and a strategy around when to take it is very much dependent on two main things. There's some other factors, of course, but the two main factors that I would say is, well, one, what are you assuming for your rate of return on your other investments? And two, how long are you going to live, right? It's very much dependent on longevity. So now, of course, medicine nowadays is getting more and more advanced, so people are living longer. But you could have, family history that has some health concerns, and your projected longevity might be earlier or later than the average American. So it really depends on those two things on when you should take it, because quick note, your assumed rate of return on your investments, if it's a higher assumed rate of return, there's a longer break even for you to maximize your benefit. So it just depends, unfortunately.
Yeah, no, that's good. That makes good sense. And so let's talk a little bit more about that. So again, if you turn on Social Security at 62, basically there is no break even because you would collect a reduced benefit. That would mean you're not pulling as much from your nest egg. And like you mentioned, if you make a higher rate of return, then that reduced benefit would have grown to, then that's a good thing. And so typically, and again, this isn't advice. To give you advice, I need to meet with you one-on-one. But typically, people that turn on Social Security, it's a little backwards of what a lot of people would assume. The people that turn on Social Security earlier are people that are less dependent on Social Security for their income. So the higher the net worth, believe it or not, normally the earlier they turn on Social Security, because the idea is that rather than maximizing that Social Security income stream, we're actually really trying to protect their nest egg and grow their assets. So that we want to pull less from their assets so that those can compound and grow, and pull from Social Security instead. Now, if you delay Social Security, that's when the break even that you talked about starts to play a role. And loosely stated, I think if you delay it till your full retirement age or around 70, normally it's around 10 years plus, meaning you have to live typically, and again, it's different for everybody, but you have to live typically in your 80s or beyond for delaying Social Security to work. But like you mentioned, people are living longer. There's been advances in healthcare. And so that's certainly, hopefully, all of our clients live, into their 80s, 90s, and beyond. But again, people don't always, nobody knows typically for certain how long they're going to live. And so that break even, you are taking a little bit of a risk by delaying it. Not a bad thing, but you have to understand the risk that you're taking by delaying it, just from a financial perspective. Now, doesn't Social Security grow, Jake, 8% every year that someone delays it?
Yep, the number is, like you said, roughly 8% per year. So again, that's almost a guaranteed return for those years.
Dangerous word.
It is a dangerous word. So there's no guarantee in our industry, but it's from the government, so it's, you got to be careful. But
right. Now, what's weird, and again, this is getting a little nerdy, but that's what we do. It doesn't compound. So believe it or not, it's simple interest for whatever reason on your Social Security, whereas when you invest, it's compounding. So an 8% return on a portfolio compounded is higher than an 8% simple returns. It's a very, I'm splitting hairs a little bit, but you're right. It's not a bad perk though by just sitting around. So if you don't need Social Security, and maybe this is another point I want to go into, if you're going to work part-time, or I did an episode on the Encore career, and you're going to make over a certain threshold, then you certainly don't want to turn on Social Security. And Jake, can you talk loosely about what that threshold is?
Yeah, the number is around 19,500. And essentially, if you make more than that in earned income, then your benefit gets reduced 50% for every dollar above that. So it's, you just want to be careful with that. If you are planning on going to work, well, let's talk about it, and let's, potentially delay it. You can redo Social Security once. So if you start it and let's say you end up finding a really good career that you want to go and explore and do, well, you can redo it and you just have to pay back any benefit you received. Now, you also can suspend it. So, let's say you're taking Social Security, but, you might come into some income. Well, you can actually suspend Social Security after full retirement age and then let it grow and get that 8% increase per year. So there's a couple different scenarios and strategies that we can incorporate. But you just want to be careful. If you know that you're going to work, it might not be in your best interest to start pulling Social Security. You might just want to wait.
Right. And again, if you wait till your full retirement age and you're still working, or you go back to work, then it doesn't matter. So it's at this reduced, benefit, what they call early, if you collect it early, that you want to be very careful of, because again, that's something that's easily avoidable, and if you don't know, if you retire at 62 and you don't know what the future is going to look like, then let's just wait. And again, the worst case is your Social Security is going to increase a little bit by delaying it, right? Again, this isn't advice, but that's just something to consider as you're determining when you should turn on Social Security. Now, another strategy that we deploy for clients is if they're married, typically maybe we'll turn on the lower benefit amount for one of the spouses early, so they are getting some benefit. The couple is getting an income stream, and then maybe if one of the spouse is going to get more, then we'll delay theirs maybe all the way till age 70, Jake, right? so that now they've got a Social Security check that's pretty high and one that's pretty low. That way, God forbid, if something happens to either spouse, they're still going to get the higher amount. Maybe you can comment on this strategy a little bit.
Yeah, definitely. Because again, if you think about delaying it past full retirement age, let's say, like you said, one spouse has a substantially larger amount of Social Security benefit. Well, they might want to delay it because, again, if you delay each year past full retirement age, you will get that, not guaranteed necessarily, but that 8% return increase per year. So again, if you're getting 8% return or increase on a higher dollar amount, it might make more sense to do that. While your spouse that has a lower benefit, you start drawing on theirs because again, it's a lower amount, but you're still getting that benefit. You're drawing less from your nest egg. And if something were to happen, there's some different benefits around that as well.
Right. Right. But that's the idea is, again, we're strategizing on two benefits, and you don't necessarily have to turn them on at the same time. A lot of couples, though, do. A lot of couples will turn both. If they're the same age, they're born in the same year, they'll go ahead and start collecting at the same time. And there's nothing wrong necessarily with that either. This all boils down to understanding your financial plan and what's going to make the most sense for you. And I've already alluded to this. So again, if something happens to one of the spouses, you don't get to collect both benefits. You typically get the higher amount of the two. And then, God forbid something happens to both of you, your kids don't typically get anything unless they're minors. Again, there's other circumstances out there. But again, typically speaking, the Social Security benefit goes away. And so that's why a lot of people don't delay it, because again, they don't know, when their end of their plan, for lack of a better term, is going to happen. And so they see it as like, look, Jake, I've paid into this for 40 years in many cases. If you had a job in high school or whatever, a lot of people have worked for 40 plus years. I'm going to go ahead and start collecting my benefits. I'm not going to work anymore. I'm 62 years old. I want to protect my nest egg for my kids and for me and my spouse or myself, frankly. So I want to go ahead and turn on Social Security. And particularly people on Social Security in years like 2022, when we've had a bad year in the market, that's helping them because they're pulling less from their investments because they're getting income from Social Security. So again, that does help, and certainly in down market years as well, by getting that income stream.
Yeah, and I think it was a good point that you brought up, the emotional side of things. Because again, reverting back to what I said earlier, people pay into Social Security from a tax, right? Payroll tax. And, when they go and draw the income in retirement, some folks, like you said, they don't want to wait. They don't want something to happen where they wouldn't get it. So they want to take it early because, again, they paid into it all of their working career, and they're like, I want my benefit, right? And it's understandable. So there's the emotional side of things too. You always got to marry what makes sense financially and also what makes sense emotionally for that person in their situation.
Right. And what's good about our planning process at Falcon Wealth Advisors is we literally can plug in you collecting at 62, your full retirement age, or 70, and show you the potential impact of all those scenarios. All we need for you is to get the numbers, right? And that's another piece that I probably should have brought up in the beginning. But again, understanding Social Security is they don't mail out statements typically anymore. And so, we have clients ask us that from time to time because you used to get a statement from Social Security showing your projected benefit in the mail. And I don't know if it's funding or what the deal is, but they don't mail them anymore. So you literally just have to go to the Social Security website. It's what is it? SSA.gov, I believe.
Yep.
You'd have to create your own account, but then you can log in and you can see your projected benefit. All we need are the dollar amounts. You could literally send me an email or Jake an email with those dollar amounts, and then we can plug those into your financial plan and look at what those projections are. So again, we don't have those numbers automatically. Clients need to go pull those off of SSA.gov. Pretty simple process to do. Provide us that data or that information, and then we can go in there and run the numbers and show you what potential impact Social Security will have on your financial plan based on when you want to draw it. It's very good, very good. So hopefully this show is kind of understanding some things. Some of these things may have been obvious to some, but some of them may have not. Is there anything else, Jake, as we wrap up today's episode that you wanted to kind of point out when we're talking about understanding Social Security?
There is one last thing, and it has to do with spousal benefits. So some folks don't understand, and they're not, maybe they haven't been informed about this, but you can actually get up to 50% of your spouse's benefit for retirement age benefit as a spousal benefit. So, and you have to claim that. So just so people understand, you don't necessarily automatically get it. So when you go to file, you want to make sure that if you have a lower benefit than your spouse, that you want to make sure that you can go ahead and claim spousal benefit. Also, if you were divorced, you can still get your ex-spouse's spousal benefit from them as long as you have not remarried. So again, if you are divorced and you didn't remarry, well, you could apply and claim a spousal benefit from your ex-spouse. It doesn't change anything for them. It's just an additional source of income that you can claim. So I just want to make sure I touched on those.
Yeah, it's really good. And I think didn't you have to be married for 10 years or something to that effect, right? So there are stipulations, like you can't just go marry someone, divorce, and then get their Social Security. Like there are rules around that. And again, if there's something unique that applies to you, certainly reach out to us at Falcon Wealth Advisors. .com, Jake at Falcon Wealth Advisors, Cross at Falcon Wealth Advisors are our email addresses, and we can dig into these unique situations and take a look at your situation and see what makes sense for you and help provide you some answers as it pertains to your Social Security benefit. That's good, Jake. Thank you for sharing that. Those are really important things to understand when you're looking at Social Security. So it's typical of the government. They've made it very complicated. It's not easy. There's a lot of nuances. You can make some wrong decisions, right? So again, if you turn it on and you're still working, you could be penalizing your Social Security. Or if you delay it past the age of 70, there's really no reason to do that. So there are some things that you could do that are wrong with Social Security. And then again, our job at Falcon Wealth Advisors is to help you avoid making those errors and those mistakes and help you ultimately understand what your financial plan means to you and help you make a good decision around Social Security and for you and your family. Very good, Jake. Well, thank you. I know that's about all the time that we do have today. Thank you so much for joining me on this episode of Upticks. If you're not already connected with me and Jake, we're both on LinkedIn. I'm on Facebook, Instagram, and Twitter. Jake, do you have any other social media platforms that people can connect with you on?
LinkedIn is definitely the best for me, so you can find me on LinkedIn.
Perfect. And I already kind of mentioned your email address is simply Cross. We already had Jake. It was taken. So Cross at FalconWealthAdvisors.com. Mine is Jake at FalconWealthAdvisors.com. Thank you all so much for tuning in. Social Security, as you can probably tell, is something that we're passionate about. It's a very important subject and a topic, and we're here to help you answer your questions. So thank you for tuning in, and we hope you all have a great week.
Thank you for listening to Upticks. Click the subscribe button to be notified when new episodes become available. Also, be sure to visit our website, FalconWealthAdvisors.com, and click the Contact Us button if you'd like to meet with Jake and his team.